So yeah, I'll be giving an overview on motor-driven systems, a little bit of an update on a lot of the markets that we track. We've been covering motors, drives, and related equipment for many years now. But I also want to talk about some emerging technologies that could be impacting the development of energy efficiency and overall market growth. Basically, these are the areas of my coverage. At IHS Markit, we cover a lot of different product groups, but they're all interrelated. And the way that we work is when we do our market research, we do interviews with suppliers. And so I hope that you'll find some of the data to be helpful. And if you have any questions, you can, of course, find me afterward. I accidentally put too many slides in my presentation, so when you look online, there will be more text to support the data that you see here. So I'll go ahead and jump into it. Just looking at the overall economic indices that we track, specifically industrial production, of course, GDP is important in that. This is the first year in 2017 that we've seen a lot of positive impact, a lot of positive change for future growth. That wasn't really witnessed by those involved in manufacturing and industrial automation, so motor suppliers, drive suppliers. It was actually a difficult year despite a big jump in growth in 2017. And we're projecting that growth to continue, though. And so even though there wasn't the most positive year on the manufacturing side, there's a lot of reason to be excited going forward. In 2017 specifically, we saw prices of materials certainly increase. And so when you look at that, that's a positive sign to see the commodity market have a slight bounce back, specifically in the last quarter. We've seen copper and aluminum increase, but to an unsustainable rate. So that's actually going to be going back down in 2018, which could cause a little bit of a setback in the projects business. However, you see chemicals are quite below with the green line. So that's leading to a continued boost in downstream areas like petrochemicals, refineries in Southeast Asia and in North America because of the low feedstock costs. Specifically looking at non-ferrous metals, up at the top you can see in 2017 where specifically copper, aluminum, and nickel, which are more important for when you're looking at input costs, they definitely increased, but like I said, to an unsustainable amount. You get a lot of speculation when commodities go up that fast in a short amount of time. So we can expect that to go down in 2018, and that could have substantial results as far as how motors, drives, even pumps, fans, compressors are priced going forward. Now, a lot of time, well, we can get into that a little bit more, but basically a lot of motor suppliers in the past have gotten into pricing contracts, and that happened right before the huge downturn. And so that got a lot of industrial manufacturers into an unfortunate situation, but that's pretty much in the past now. And so one other unique thing, specifically relevant to your regions and the Eurozone, we haven't really seen economic sentiment this high in quite a while. So that's a really good sign of growth, a lot of good sign of stabilization, specifically in this past year where there's been a little bit of geopolitical turmoil, to say the least, but all signs are of positive so far. So it'll be interesting to track that economic confidence. Industrial investment levels seem to be climbing as well, so that always bodes well. Now I'm going to get into the more product-specific areas. I'm talking about low-voltage motors here, which, as for definition, we keep that at 690 volts and below, would maintain the definition of low voltage. That's true for drives as well. And when I say drives, I mean variable frequency drives, variable speed drives, for example. And so we'll get into that a little bit more. But I just wanted to give an overview of who the top players are, how it looks on a geographical plane there, and what are the different growth rates. You can see in EMEA, that's Europe, Middle East, and Africa, not it doesn't look like a lot of growth with 0% from 2016 to 21, but there will be in the short term, in the medium. Really, what it is just growing back up to previous levels. So when you look at what's really going on in the motor market right now, there have been weak profits. There have been an increase in standards over the last several years, really. And what that's led to is more of a focus on product design, lean manufacturing, and of course, research and development. There have been a lot of push for higher efficient motors, of course, and when that happens, there's rough increase in price of about 15 to 20% on average on comparable motors being upgraded from maybe IE2 to IE3, for example. But consumers are still cost conscious. There are a lot of low-cost suppliers that are involved in several emerging markets still, and so that can certainly hinder growth. But brand recognition is also very important still to this day. But what we're seeing is a little bit of a commoditization of the market as standards increase around the world. There's getting to be a little bit more of a blurred line between maybe a top-tier supplier and what the next-tier suppliers can offer. And so looking a little bit more at input costs here, the input costs really went up, as I noted, in 2017. While that could be good on an investment level, just in the general energy markets, that wasn't really able to be passed on to consumers in 2017. Now that might change in 2018 as prices go down, but really what that led to was an unfavorable situation this past year, because it was really hard. You'd be hard pressed to find a motor supplier that was operating at a profit just on selling the motors themselves. So they're finding other ways to make profits with maybe services and other solutions. And so that's really been a driving force in pushing companies to become more solutions providers. It's not true just for motors. It's true with the drive market. We'll talk about that more for the pump market as well, specifically. But this is a chart that really tracks the efficiency level of motors on a global span over the years. And so it's a little bit of a, I guess, just a history refresher, if you will. But you can see it's looking at motor shipments over time from 2010 forecast out until 2020. IE2 motors are really still prominent because they're used in a lot of areas still. In the Eurozone specifically, as we're all familiar, there's the option you can sell IE3 motors for a certain range, or IE2 as long as it's used with a VFD or a variable frequency drive. And what that means is that it's hard to track and it's hard to predict what options people will be choosing. One of the biggest things that's not on here is the growth of IE4 or super premium efficiency motors. And we're tracking the growth of that as well, but it's a very small part of the market. And so you can see that here. As of 2016, IE4 permanent magnet motors, for example, really accounted for less than 1%. And that's important because there's a big push for this technology, specifically in the pump, fan, and even compressor market. But it's such seldom used still. And so the IE1 was dominating the market. And by 2021, what our forecast is that it will be it will be second, maybe even third smallest efficiency standard of motor being incorporated. And so a huge reason for that growth is going to be the need for more energy efficiency, of course, but specifically being led in Western Europe, North America, and China. And one of the other things I'd like to point out, one of the emerging technologies that I'll talk about is the industrial Internet of Things. And really what that is it's or Industry 4.0, as more people say here, I think. And that could potentially be a headwind to maybe selling products that exceed energy efficiency standards, because when you're looking at maybe increasing the motor efficiency point by 2 or 3 percentage points, that's not the most effective way to save money if you're able to maybe sell a less expensive motor but use it properly, track the usage, and save the time. So the lifespan of motors and drives and other equipment is expanding quite significantly right now. And just to give you an example, if I were looking at this from a motor and drive standpoint, motors sold into pump, fan, and compressor applications, these top three right here. It's really hard to point this thing, by the way. The aim is not on. Anyway, so that's where most of the energy is being consumed. And so if you were looking at the other smaller applications, they're very heavily used for gearboxes, geared motors, and stuff like that. And so there's a huge focus for if you look at motors, but specifically variable frequency drives to be sold into compressors and fans and pumps, because though it makes a lot of sense, I think about 10% of the installed base currently uses variable frequency drives. So if I were a supplier of variable frequency drives, that's where I'm focusing right now. That's where a lot of the market is dictating growth. And so just a similar slide, now I'm talking instead of low voltage motors, this is low voltage drives, or variable frequency drives, for example. You see the largest suppliers here. I don't think that's a huge surprise, but you do see a faster growth. You see there are half as many VFDs sold as low voltage motors on an annual basis, and so it's a smaller market, but it is growing much faster. It's very heavily dominant in the Asia region. About 60% of the market comes from there, very heavily leaning towards Japan as well. And really in all regions, there's a lot of reason for optimism for growth for the drive market. Specifically, we look at the industries, so we track motor and drive shipments into various industry sectors. Commercial HVAC, which is heating, ventilation, and air conditioning, that's been one of the more favorable businesses for both motors and for drives, really, but it's been the least affected. When you look at how much decline there was in a lot of these energy markets, so for metals, for oil and gas, for mining, even power generation, there's been 10–15% decline in recent years, and that's been really hard. That's been affecting the market. It's been pushing prices down, and really what I think that's important, because there's a push for not necessarily more efficient drives. By and large, what we hear is that customers are asking for simpler products. And so that means maybe using less copper and more aluminum, and so it's pushing prices down by maybe 30–40% in some applications. That hasn't quite been the case in the HVAC market, and that's why there's been enough room for growth and recovery in such a quick amount of time. So on that note, if you're not familiar with these terms, this is referring to the product type of variable frequency drives. So you have standard AC, compact AC, which is the least efficient, and then premium AC, which is the most efficient. In years past, there was more of a push and a higher forecast for the premium AC product, but focus on cost savings. Like I mentioned, there have been many projects that we've been following and interviews with suppliers where customers are saying that we have to find a way to decrease the cost by maybe 30 or 40%. And that's huge. And so the way to accomplish that is to make a less efficient product, make a less premium product, basically. And so that's still the case that compact AC drives are the most prominent in terms of units shipped. And so this slide isn't really as important. It's just kind of an overview of the regional distribution. So I'll let you kind of review that when you read it online. But understanding the sales channel is really important, because one of the recent trends that we've seen specifically is where drive suppliers are looking to expand into. And so I mentioned some of those lower applications where it's heavily influenced by the gear market. Well, one thing that we've seen is that machine builders, or OEMs, as we define them, they're the largest sales channel for drives. That's important because we've seen that a lot of these OEMs are starting to make their own drives. They're starting to get into the market. And so it's something that we're tracking really closely, but it still remains to be seen how important that is going to be for market development, what kind of impact that might have. It's possible that more market consolidation is important, but basically for years now, drive suppliers have been trying to find ways to get to the customer. And so they could really shake things up, I think. Okay, and so now I'm going to be talking about the pump, fan, and compressor market. I'm going to go through these pretty quickly because I think I'm short on time. But basically, I just wanted to give you an idea of the growth of the pump market. This is specifically looking at centrifugal pumps. There's a large growth rate that we have forecast for the future, mostly because of the bounce back in oil prices and commodity prices down the line. But when you look at pumps, fans, and compressors, they're used everywhere. And so there's a lot of push for energy efficiency in these applications. I think we'll see a lot more drives being implemented. But when I was talking about Internet of Things earlier, I think we'll see that emerging technology pick up on here. This switched over to positive displacement pumps. You'll see a change in the leading suppliers there, but similarly solid and stable growth rate that we project. And if you look at how the market's developed, I'm talking about pumps specifically here, you can see over 50% of the market is looking at water and building services. Another large chunk is going towards construction, also HVAC. The products here, this is probably too small to read right now, but hopefully you can look at it later and see that the circulator pumps, sewage pumps, and boosters, submersible, all had positive growth implications this year. So we heard a lot of good things, and we think that that's going to keep growing. But yeah, that's something that I'd love to talk with you more about if I had more time. But basically, the key trends that we're seeing is that historically, the person buying the pumps they haven't been paying the bills. And so I think that it's been really interesting to see training programs grow. Pump, fan, and compressor suppliers are looking to really find ways to get to the customer and show the importance of energy efficiency. And so in the US, the Department of Energy has passed pump regulations. It doesn't look like anything's going to become firm for fan and compressors, but I know that that's hopefully happening in the Eurozone as well soon. So I'm just about out of time here. I show some more data on fans and compressors. It's less important. But I think that the main thing is the Internet of Things is what I wanted to finish on. Basically, we see a lot of suppliers that don't have any plans to incorporate Internet of Things or Industry 4.0. We do see that growing, though. So that was an interesting survey that we did. There's a lot of growth there, but I think that those markets that we talked about are going to be where we see it picking up. Typically, a motor is not something that you would think of being a connected device, but it's starting to be seen that way. We're seeing more connected nodes, integrated units, electronics, and so it's really interesting to see how people are using that, because it's not just about energy efficiency anymore. It's about saving the customer money and predicting maintenance and really bringing products to market faster. So anything that can remove those hidden costs is going to be really key. So something like uptime as a service, for example. And so on that note, I would love to expand more on that if anybody has any questions, but my time is up, so.